8/17/2013, Saturday. Great day, August. Okay, 8:50 a.m. is the time. I'm going to go over the transports with our MMTs. And why is the transports very important? Because transports, when they're down here, just like the S&P was, you have great rallies, and transports do still lead rallies. You always want to see those working, and you want to see the financials working together, and the home builders, all of them were. So we have quite a reversal up here on this level, and let's define the level. So we can clearly see it's a weekly chart as it is. And the transports have broken through their 10-week and come down and undercut slightly the 20-week. Now, over here on the Dow, which is a monthly chart, you can see the month of August right here that we had called for that correction on 8/2. When you look at it on a weekly level, you're violating the. Now, here's the thing, the Dow is violating again the 10-week and the 20-week MMTs. Not only that, you're in the dog days of August, and this is where we called for that last correction on May 22nd. It's on the stockmarketfunding.com website. You can find it there. Then it was time to get net long in the Dow, and we are having another major sell down. We came down here and we rallied, but look at, we had 1, 2, 3, 4 to the 5th week down to the bottom where that reversal came in. We're only in week number 2 of this correction in the Dow. Now, what will end up happening, that I showed the S&P 500. I will throw in to let you know that that S&P 500 was a major yearly update going into the seasonality changes of September and October of 2013. And currently the correction that the market needs is underway. And you can make money by using certain bear ETFs to get these gains when markets want to go down. So with the Dow selling off and the transports, and they both have a picture here together, they're both violating in phase one. This one got support at the 20-week, and it got back up here in the transports, but they have a major test right now. So with the very anemic light volume in the calendar month going into September, meaning that today is the 17th, and Sunday's the 18th, and guess what, the 19th, and we start getting into the back end of that month, what we're looking for, are people going to chase this dip? Are they going to chase these dips in the transports? Are they going to chase these dips in the Dow 30 component? So there are 30 stocks, and there's a couple good leadership stocks in there that are worth buying, that will end up giving the overall Dow support. But look at what Walmart said. Earnings weren't good. I'm sorry, they guided the quarter down. Not only that, the tail end of the earnings have not been as good as last year. They've been decreasing in value. Yes, the economic data that people talk about in the stimulus programs and the FOMC and all of the retail things that people go through and what institutions look at, what everyone around the world looks at, and everyone in the US looks at, is the bottom line is retail is doing extremely bad. They're not kicking out and beating on the earnings like they should. So the consumer payroll base in the US, that's your US payroll, consumer payroll, that payroll obviously is not going up in value to offset the high standard cost of living, such as power, such as other inflated areas in your life, your medical and things like that. So the consumer part, the consumer sentiment also dropped. And the tapering of the FOMC stimuluses that have been injected at $85 billion a month is what happens when that starts to come down a little bit. The Fed is not going to ruin the recovery, and there's going to be a new person that's going to take over. So these bull runs that have occurred in the transports in the calendar of 2013 have been remarkably good. They've driven them right up to the all-time highs. Here's what a monthly looks like in the transports. Transports were on sale at 5,800, and we went up to 66. So this is what it looks like. But look at the monthly distribution. That's a very long 66.75 down to 64.75. That's a sell. This was a sell too, but they peaked the highs. See, sometimes when you get these sells, that's always the beginning. Here's a double month correction last from May 22nd when we called the high to the monthly low, and we popped right back up. That's 3 months back up, and the summer rally's over. What does that mean is that there has to be a major rebalancing act for the institutions and the broader public. So the price volatility will increase, and price volatility, both the bear and the bull have equal weighted risk because they can drop the bids intraday on stocks, and they can walk and print the ask all the way up a few dollars on a stock. So both the bull and the bear have the equal amount of risk of them dropping the stock intraday, $5, $7, $8, and the bear, they have the equal amount of risk because if they could walk the stock up $4 or $5 intraday on light volume. So both parties have that kind of risk at that lower volume threshold within the indexes. And you know, options expiration monthly that just occurred is occurring today. 8/17 is the monthly expiration. So the transports are very important, and there is a correction in play, and you can buy various different ETFs. Here's a 60-minute reversal up here at 65.20. Bam, bam, and we rallied right up great off of the bottom. Here, let's take a look at this one on a 60-minute level. Let's compare the two. Here's the Dow, and here's the 60-minute Dow. This transports, once the transport started to reverse at that resistance level, and then here's your volatility on a 60-minute level, but we made those lower lows all the way down here. And you can see how accurate that the transports led it first, and then the Dow 30 caught up. See the rally here? These 3 60-minute bars. See the 3 60-minute bars? See the bigger bar reversal? That one started down a little bit first, but the Dow went right along with it. So what we will be talking about is what we're going to do when we look at the daily level. You got support down here at 14.7, and we got some pit stops along the way. However, there is a little bit of technical damage that has been done that the public and the institutions are going to be looking at. And there's nothing wrong with taking profits in this environment. Remember, there are a lot of volatility headlines that are out there right now. And listen, it's light volume and whatnot, but we'll be looking at where those next dips will be bought, and we'll mathematically calculate those first buyers in any great bull run. You always have buyers, and you go up and you fill and you go lower again. That's what I was showing on the 60-minute chart here. So as the buyers come in, they fell. So this is just where the last top was on the Dow. So it's very important that we get the right ETFs. There's bull and bear ETFs around all of this. So you can use that in the management sequence process to balance your risk and weight it.